Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Cowley. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Cowley, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Cowley.
Welcome to another edition of Premium Cashflow Podcast. Today, I'm delighted to welcome Vanessa Peters with VMD Investing. Welcome to the show, Vanessa. Thank you for taking time.
Yeah, absolutely. Happy to be here.
Awesome. Vanessa is a great partner and somebody I know for a few years now. And we kind of partner on several deals. She has a great experience of herself investing in single-family houses. She has invested in a lot more multifamily projects as well. She has passively invested in 2,500 units so far, crossing 11 properties. And she has also raised funds in 4 mutual funds for real estate and different sectors. So you want to give us some background, Vanessa, as to, how, you came from a medical field. You still are a doctor. You practice full time, but real estate is such a passion of yours. Could you maybe kind of give us some background and kind of relate to your real estate story as well?
Oh, absolutely. Be happy to. Thanks for having me on the show. I have always loved real estate, and I wonder if I would have been full-time in real estate if I hadn't decided to be a doctor. But the truth is that growing up in Canada, it isn't the same entrepreneurial spirit as you see in America.
Sure.
And I, didn't know any entrepreneurs. Everybody had a regular job. My stepdad worked at a coal mine, and he had a job and all that, very stable, nothing outside the box. So when I got into high school and thinking about careers, I really kind of naively only thought that there was a couple of careers for me. As an A student, I thought, well, I could be a lawyer, I could be a doctor. So sure. I was better at science than the other stuff, and so I decided to be a physician. I also thought that I would be my own boss if I was a doctor. Turns out that's not exactly true. We all work for big groups and sure. Affiliations with hospitals and insurance companies. We have plenty of bosses, right? Sure. So, but when I was in my career, starting to make fairly good money, I moved down to the U.S. I noticed that my net worth wasn't really increasing as fast as I would like. I was working really hard. The tax man was taking a lot as well. And I thought, my gosh, I'm going to be working really hard for a long time. My tax advisor said, hey, if you want to retire, you're going to have, so many $1 million in the bank. And I looked and I was like, oh my God, that's going to take me forever to get up there. And sure. I'm already a pretty good saver. I'm pretty frugal. I'm not spending a lot of money on cars and houses. So while I thought I was doing great, I realized after working about 10 years that, I couldn't see the benefit of the compounding that they had promised me when you start saving your money. Where's this compound interest? Sure. Things were kind of going up in a straight line. There was no like hockey stick or J curve. So I started looking at alternatives. Back in 2008, on the advice of a realtor friend, I bought a home during the downturn north of me. I'm in San Diego, but this was in Riverside County, which was just half an hour away. I bought a short sale home for $225,000. And that has worked out very well, but I didn't know it at the time. Hindsight is 20/20, right? Sure. So that was my first foray into real estate about 12 years ago. I got some good tenants in there and basically just left it and forgot it because the value kept going down because I bought so early in the downturn that the values kept going down for another 3 years. And so I was nervous. I was like, oh, I don't know if I did the right thing. Of course, if I had been more educated, I would have purchased 10 or 12 or 20 of those homes, right, that were becoming more and more available. But I didn't know better. I was getting married. I was having a child. I was busy at work. So I sort of missed the boat on the whole, downturn, except for that one home. Then a couple of years later is when I sort of had the realization that I was working awfully hard. My child was young. I wanted to spend more time with him. And that was sort of like the aha moment that I'm trading my time for money. And I need to find a way to make my money work for me when I'm not working. Because as physicians and other high paid professionals, we are trading our time for money. And when we're on vacation, we're not making any money, most of us. And I wanted to switch that up. And I knew that real estate was the way to do it. So I had read Rich Dad, Poor Dad early in my medical career, and I wasn't ready for it at the time. I had just finished school. I had tons of debt. I wasn't going to bail on my medical career to, become an investor or business owner. But 15 years down the road, I look at it again. I'm like, okay, this makes more sense right now. I need to start building a business. I need to start becoming a true investor, not someone who just puts money in their 401k. And so I got really hot and heavy in real estate again, and looked everywhere to buy some more properties here in California. Of course, in the mid teens, like 16, 17, there was nothing I could buy up here. There's nothing that I could duplicate like what I had, because the home I bought in 2008 had doubled in value. And I was like, wow, that was a good investment. Gosh, let's do that again. No, that's not going to happen. So I looked everywhere for local properties. Couldn't find anything. Then I looked into other types of real estate. I went to Bigger Pockets. I went to meetups. I learned what other California investors were doing, which was investing out of state, right? And I thought about it, but decided that I didn't want to purchase a out-of-state home, like a turnkey, because I don't have any connections in other places. And I wanted to be able to get to the place, whether by driving, not a flight. Too much risk. I'm pretty conservative. So I decided to keep looking. I wasn't going to give up. And that's when I started learning about syndications and then multifamily. And I thought, what is all this about? And the more I dug into it, the more I realized that this was a perfect investment for me. I'm still thinking of myself as a passive investor. So I had said, hey, I have the capital. I don't have the time. So when I learned about syndications, the value that they bring to the apartment communities, the excellent returns, the excellent tax benefits, and the limited amount of active participation, I was like, this is perfect. This is my thing. This is what I'm going to do. I had found my niche. So that's why I love multifamily and syndications, because I had capital, and I got as much capital into syndications as I could. So that was, that's where I started. And
I totally agree with you. I think the whole aspect of, you're working so hard and, sort of trading time for dollars and things like that, that weighs on you. Obviously, if you're working, you're still a high-paid professional, but at the same time, you have all those sort of trials and tribulations that you still have to kind of show up for work. You still have the stress of liability and things like that. You're working like round the clock crazy for sure, and the other aspect that I really love is that the challenge that you have are the same challenges like your colleagues next to you or around you have, so like, let's say if you're a main physician at your office, you have some other doctors as well who will say, hey, you know what, I love to, but I don't have time. But guess what? With syndications, you can kind of bring them on. You can educate them in terms of, hey, these are some of the benefits. You can educate them about, what different sectors are available and things like that. And to your prior point about also that, hey, you had sort of that one lane path that, okay, you have a limited choice of careers in terms of and things like that. But the moment someone starts to, I think, look into real estate, they start to realize that, hey, you know what, there's just all these other avenues. It's just not real estate. When you come to syndications, you realize that, sure, you can raise money for funds. You can raise money for mobile home parks. You can raise money for, let's say, a hemp oil or perhaps a coal or an ATM. I mean, the avenues are so many that I think someone who has an entrepreneuristic knack can probably go in an overdrive and kind of learn about different phases. And I like to always say is that there are not that many avenues where like adult folks like us can get excited, but real estate and syndications is one where you can explore a lot and still remain excited about all these different things that you can do. Would you agree to all of this, Vanessa?
Oh yes, absolutely. Yeah, absolutely. When I found out about it, it was like some big secret, right?
Sure.
And I got kind of a little bit upset. I was like, why hasn't anybody told me about this? And then I read some books and I was like, oh, I get it. It's because it's it's an exempt transaction from the SEC, and it's Regulation 506, Regulation D 506B,
Sure.
meaning you have to know somebody to get in the deal. And I was like, oh, okay, well, that makes sense. So then I thought, I need to tell people about this.
Exactly.
I need to tell my friends. I need to tell my colleagues. I'm
Sure,
so passionate about it. And it's interesting. You see a variety of responses when they're asking you what you're doing. You're like, oh, I'm into this. Some of them are like really interested. Oh, tell me more. I want to learn about it. And other people are like, that sounds kind of risky. I don't want to do anything that's outside the box.
Sure,
there's different folks out there, but there's plenty of people, I think, that could benefit greatly from these types of investments.
I agree with you. I think education is what sets you free. And personally, what I have worked on is like changing the mindset, or perhaps explaining folks the benefit of it, that this is not Wall Street. This is a completely different path where, as you alluded to, you have to know somebody, or you have to know, like, or trust, as we call it, and explain them what the benefits are. And as we always say, is that like once you have education, you kind of gain confidence that, yes, I think I understand this and I'm confident enough to invest. So speaking of that, Vanessa, like when you are sort of, working with your fellow members and things like that, how do you sort of explain them the benefits, or how do you kind of educate them about, like, let's say, the multifamily, or perhaps what a PPM is, or, just all the other aspects that come with this type of investing?
Well, sure. I mean, there's a lot to explain, and it can be like drinking from a fire hose for folks who have never heard about it before. So you really start with a preliminary conversation about, okay, this is an apartment building and it's like a flip, but it's a long flip. It takes 5 years to flip a building, or 3 years. And, and the folks who put together the deal don't have enough money to buy it outright. And so they need investors, and then they pay them handsomely for this. So, I explain the basics of the deal. Then we get into, why it's so good for them. And of course, the returns. There's tax advantages. There's the, passivity, like I mentioned, and there's appreciation, both forced and, natural appreciation. We go through all that. And after having many of these hour-long conversations, I realized that I should probably just write a book about it. So that is what I did last year. So I wrote a book called The Busy Professional's Guide to Passive Real Estate Investing.
Awesome.
And it goes through the basics. It's basically a primer on syndication. There's a little bit about my story in there, but a lot of it is just basics on syndication for folks who are unfamiliar with it. Gives them the definitions of things like, what is an accredited investor, what's the 506B, what's a 506C, that kind of thing, what you're looking for in a deal, what kind of criteria. So I found that to be very helpful, in that I can be like, hey, here, go ahead and read my book, and then we can chat. It's a quick book. You can read it probably in 3 or 4 hours.
Awesome. Just for our listeners, Vanessa, if you don't mind, show the picture of that book again, and if you can share the title as well.
Yeah,
Great.
Sure. Yeah.
Awesome.
The Busy Professional's Guide to Passive Real Estate Investing. If you go to my website at vmdinvesting.com/book, there, and even on the main page, there's a free few chapters, or you can grab it on Amazon as well.
Awesome. Busy Professional's Guide to Real Estate Investing, folks, the title, and her website, vmdinvesting.com. Awesome. So as we continue on this path of, like, let's say, educating your investors and things like that, Vanessa, how do you kind of tell them about, hey, I trust this partner, or I like this market where the apartment asset is, and things like that? Could you maybe share some of your thoughts about how do you vet a sponsor, or how do you vet a deal and things like that?
Sure. Yeah, it's the most important part. So, when you're an active real estate investor, they've got the 3 T's, which is the tenants, toilets, and termites, right? But when you're a passive investor, you've got the 3 T's, which is team, trust, and track record. So you've got to make sure that the team is a good team. And it doesn't matter where the deal is. It doesn't matter what the deal is, or, you know, what the asset class is, or what the returns are supposed to be. If you don't have a good team, it doesn't matter. None of it matters, because a bad team will mess up anything.
Sure.
So I always look at the team first. So, you know, evaluate the general partners of the deal. How long have they been doing real estate? What are their prior track record? What are their deals? Then I like to talk to them. I'd like to try and meet them face to face if possible. In this day and age, of course, it's on Zoom. Just to get some eye contact and see how they are as a person. Do I like them? Do I trust them? I get a gut check on that. And so, you know, if you trust them, if they have a good track record, and then they seem to work well together, they've got complementary folks. So, you know, if they're all like IT tech guys, then that concerns me a little bit, you know. You know, you need different people to do different roles. Like the current deal I'm working with, we've got a super smart numbers guy, and then we've got the marketing guy, and then we've got the guy who has like the deals, the network to find the deals. So those are all important things. The first deal that I did as a limited partner, I was nervous. I mean, when you're putting up a good chunk of money, you want to make sure that it's not going to just disappear, right? So initially when I was doing deals, I would literally fly out, walk the property, and also do a background check. I would do a criminal background check on the operator, the property manager, and the, you know, any of the GPs. And, you know, that was initially to get me to feel comfortable doing this. I'm not doing that so much anymore, but that's also because this is a small world. And you know, I like to currently to bring on a new operator. I need a mutual connection. So I don't feel comfortable if someone, you know, pings me on LinkedIn. I'm not probably gonna talk to that person. Well, I can chat, but I'm probably not gonna give them any money. Definitely not bring any investors money. You know, until I have some experience with them, or I have something corroborated through a mutual connection.
And I totally agree with you. I think that relationship aspect of this is so key, that you have to know them, you have to understand, you know, their style of investing, things like that. And it really does take time. And once you see their track record and what things can happen, I mean, it is a natural connection, and you kind of build that trust, and you get to say to your colleagues as well that, hey, I have invested, I have experienced this group, and here are the benefits, and I love this market, and things like that. So now, speaking of those markets as well, Vanessa, could you maybe kindly share that where are the different markets that you have invested, and perhaps why you like those markets for, you know, for various reasons, perhaps?
Sure. Yeah, most of my properties are located in Austin, Dallas, and a little bit in Florida and Phoenix.
I see.
And then most recently, Greenville, South Carolina. So the markets, you know, tend to be the larger markets with good employment, people moving to the area. It's great if there's headquarters of businesses moving to the area. They should be landlord-friendly states that are also friendly on taxes, and as well have just positive numbers in terms of the flow of jobs and people coming into the area.
Sure. And do you like to see, like, let's say, of course, as you alluded to in the prior conversation, that yes, there should be a rent growth component and things like that. But do you prefer that when you're investing, there should be some value add component, like a good story behind, okay, how they are going to achieve enhanced rents in the immediate future and things like that? What would you say to some of that?
Yeah, absolutely. You know, I'm looking at buildings that are in the like 80 to 95 vintage of build and have good structure, good bones. Nobody wants to improve the plumbing. That's not going to improve your rents, right? The renters assume that the place has good electrical and plumbing and roofs. So you want to see something that could be improved cosmetically, that needs updating, and there's definitely a value add component. I'm looking at B-class properties that could be improved, but hopefully they're in a B+ to A- neighborhood. The A-class properties or new developments are not a niche that I'm interested in right now, especially in this downturn with COVID, which we're currently in. You really, the A-class properties are the ones that will suffer more than a B-class property due to people tightening their belt and kind of moving down into the still nice, but slightly less pricey apartments.
Sure. Couldn't agree more. And of course, let's say the rental price and the income growth is one component, but as we all know that I think reduction of expenses is another, a huge area that, hey, could we conserve water? Could we add some perhaps LED lights and things like that? So those are some aspects, one of the several aspects sometimes look, I think the modern trend as well is that, hey, can we have a master internet, like a giga internet of sorts, and, bill it to the residents and things like that? Or Amazon lockers is like another huge thing that nobody likes to see a bunch of boxes laying around in leasing office. So, that's another amenity. Those are, just a handful of them amongst the many.
And the thermostats, the Nest thermostats and keyless entry, all kinds of millennial friendly stuff.
Sure. Absolutely. Now, Vanessa, as you're continuing in your career, right? How are you sort of interacting with more of your investor perhaps, or, doing different things to attract more passive investors to you? What are some of the things that you are kind of doing?
Well, I wrote the book in the hopes that would really help get the word out there.
Sure.
I'm also participating in multiple, mostly online conferences at this point. Being on panels or speaking. I've been in Dan Hanford's conference a couple of times, and some other apartment investing type conferences. And as we get back to real conferences, I'm excited to do that.
Sure.
Also in the medical field, since my, niche is medicine, I'm still working full time. I'm looking at getting involved with other physician-centric groups.
Sure.
And, there are masterminds, part of a mastermind for investing with doctors and dentists. There's a couple of great groups of physicians who are savvy in terms of finances, and getting more involved in those communities as well.
Couldn't agree more. I think someone like you who has, high net worth friends, always around you, it's such a natural avenue to kind of be that torch leader and a thought leader of sorts, and, kind of educate them about it. And absolutely, that's such a natural sort of progression for you. And I'm very happy for you that you can kind of do that and, sort of spread the word, because as we all know, I think the power is real. It's just that education component, or like having people tell that, hey, yes, this is like a non-Wall Street way of investing. It has definite tangible benefits and things like that. So I'm really happy for you, and congratulations for your book as well. Kindly share with the listeners how they can find you, Vanessa, and learn more about your company and different services.
Okay, thank you. If you want to check me out at my website at vmdinvesting.com. I'm also on Facebook and LinkedIn under my personal name, Vanessa Peters, also as the business. Then my email address is vanessa@vmdinvesting.com.
Incredible. So for viewers and listeners, Vanessa Peters with VMDinvesting.com. She is a thought leader in the space when it comes to multifamily passive investing. Kindly reach out to her. She's a great friend and an immense knowledgeable person, and always great to network with her. I am Sakhar Kavle with PremiumCashflow.com. You can always check out various articles, notes, and stats on the website. And we always have great guests like Vanessa on the podcast all the time. So there are several guests and several incredible episodes that I have personally gained so much knowledge from guests as well. And you can log on to PremiumCashflow.com. If there are any interested parties, they can always register themselves, and we can jump on a short phone call and understand what your needs are, and see if we can help each other out. So thank you, Vanessa. It's been a pleasure. And, I look forward to, having you on another episode as well. So thank you for coming on today.
Thank you so much. I appreciate it.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.